All right. So life insurance for the living and understanding living benefits. I'm excited about sharing this information. As Ronald George said, my name is Eduardo Sprague, and I have over, I guess, coming up on 3 decades of experience in life insurance, and I'm still loving it, still enjoying it, and excited about sharing this information with you. So let's jump into it. Life insurance for the living, understanding living benefits, assessing your policy's value when you need it the most, and that's during your lifetime. So living benefits is what I like to call the game changer. So we're going to talk about it. Today's agenda is simple. We're going to go over several things. Uh, the evolving role of life insurance, what are living benefits, and then look at the living benefits, terminal illness, chronic illness, critical illness, and critical injury, and cash value. And then the critical considerations and trade-offs, and who should consider living benefits. And then we'll summarize everything that we've gone over today. So big agenda, we're going to jump into it. The evolving role of life insurance. So here's the thing. Life insurance is more than a death benefit. And the traditional view has been this. Life insurance is a financial safety net that pays the beneficiary or pays cash to the beneficiary only upon death. And this protects against the instance of where you may die too soon, excuse me. And so the modern reality now is this, and this is the new risk, and it's the financial devastation of having a severe illness or injury that can be as crippling as death and exhausting all of your savings and retirement funds. This is the risk of living too long with a major health event. So what is the solution to that? The solution is living benefits. And that bridges the gap, providing financial protection during a severe health crisis. So that's what we're going to talk about today, living benefits. A lot of people are not aware of living benefits and how they work. So this is a great topic tonight, and we're going to cover it and look at how you can begin to upgrade the insurance that you have, and definitely need to do a policy review if you currently have a policy so that we can look at if you have living benefits or not, and definitely why you need to have them. So what are living benefits? Accelerated benefit riders is what they're called, ABRs. We like to call them living benefits, but the official name is accelerated benefit riders. And the definition is living benefits typically offered as an accelerated benefit rider, or ABR, are features that allow the policyholder to access a portion of the death benefit, or the life insurance death benefit, early if they experience a qualifying event. So the key concept is this: the money is an acceleration of the death benefit, meaning the final payout to the beneficiary will be reduced. So what that means is that anything that for life insurance, any money that you get out of the policy comes from the death benefit. So even with the ABRs, the accelerated benefit riders, they will come from the death benefit. And the funds, the good thing about it is the funds are generally paid in a lump sum and can be used to pay for anything you want to pay for, any purpose you want to use them for. So we're going to look at the different variations that you can spend the money for, as well as what the living benefits are. So living benefit number one, which is the one that most people are familiar with, is terminal illness, the terminal illness rider. And the qualifying event happens normally if you're diagnosed by a licensed physician, and then it says that the insured has an illness or a chronic condition that they are expected to end up passing away within 12 to 24 months, depending on the carrier and the state that you're in. So some carriers, some states cannot go beyond 12 months, and then some will allow you to go 24 months, because keep in mind, insurance is regulated by the state. So various states can have various rules as to what how far they can go with the rider and what it can cover. I'm sorry about this alarm. All right, so it can go to 12 to 24 months. So the purpose of the funds is for paying for experimental treatments and specialized treatments. Sometimes people use it for that. If they have an illness or something that, of course, is terminal and they want to get some specialized treatment, of course, a lot of times that is very expensive. So having living benefits and having that terminal illness rider will allow you to access the money that you could use for that, covering end of life expenses and hospice care, or funding a final wish and providing financial security to the family. So it's just a lot of different things you can do with the funds that you get when you access them for a terminal illness with all of your ABRs. The next one is chronic illness. Chronic illness, or it can function as a long-term care. Chronic illness rider is the qualifying event for it is when a person cannot perform a specific number, typically two or more, of the activities of daily living. And the activities of daily living are bathing, dressing, eating, toileting, grooming, transferring, and continence. And or sometimes some of those riders cover severe cognitive impairments as well. And so purpose of the funds for that are pretty much the same, as well as other options as other ones with the terminal illness. Funding long-term care, such as a nursing home or other expenses, paying for an in-home care or assisted living facility, or providing income replacement if a spouse needs to stop working and become a caregiver. So just remember that this rider is distinct from the dedicated long-term care. So it's different from long-term care, but it can function like long-term care. But I feel it's a lot better because with a lot of long-term care policy, you have specific places you can use it and what you can use it for. Once again, these ABRs, you can use the funds for whatever you'd like to use them for. So
I do not like this. It's not supposed to do this.
So living benefit number 3 is critical illness or critical injury. And some ABRs, some carriers rather, only do critical illness. Some carriers do critical illness and critical injury. The qualifying event is a diagnosis of a specific covered severe critical injury, such as a heart attack, stroke, life-threatening cancer, major organ failure or transplant, such as kidney failure, something like that. And the list of covered conditions varies by policy and by carrier. And of course, the purpose of the funds for it is covering high deductible health plan costs and specialized medical bills. So once again, you can use those funds where if you're in a situation where you have a very high deductible or you need some type of specialized treatment, you can use the funds for replacing lost income during recovery, and you can use it for paying for a spouse or family member to travel with you in support or just be a caregiver. So the critical illness and the critical injury are definitely there to cover those type of incidents. And the critical injury, I put illness here, And then injury as well might be like becoming paralyzed or having a severe accident that is a critical accident. I shouldn't say severe, but a critical accident that puts you in a major catastrophic situation. So that living benefit rider covers critical illness and critical injury. And then the fourth one is living benefit number four, which a lot of people are aware of when they look at cash value, but they don't look at it as a living benefit per se when you compare it with the other ones, but it is. And that's cash value access. And of course, that is with a permanent policy only. And the cash value is the policy's built in living benefit because the cash value policies of course, all have that cash value versus the term, which does not offer cash value. So it applies to the whole life, the universal life, and the index universal life, and any other cash value product. And how it works is a portion of your premium is allocated to the cash value so that you're growing cash value in this policy. And then it grows tax deferred over time and you can access it, this cash value during the lifetime of the policy throughout the policy for varying different things that you may need the cash value for. You can do it through policy loans, so you can borrow against the cash value, and it must be paid back with interest, or it'll be taken out of the death benefit. Remember, I told you all cash value policies, anything really you take out of the cash value policy is going to come out of the death benefit. You can take withdrawals directly taking money from the policy, and it may be taxed. And of course, it reduces the death benefit because once again, everything is taken out of the death benefit. And then the benefits, it provides a flexible private source of emergency funds or retirement savings. So it is a good deal to have the cash value policy and have the actual access in the cash value. And the beauty of that is with the evolution of life insurance and it growing, cash value has become a much better product than it used to be in the past. And a lot of people need to be educated on it because these living benefits are the game changer in the cash value policies. So I like to call them the game changer. So here's some critical considerations and trade-offs. The fine print of what you need to know about the living benefits and accessing the living benefits. The amount that you receive, as I told you before, in the living benefits is deducted from the final death benefit payable to your beneficiary. So this is not extra money in the policy, and it's not an extra part of the policy. It does come out of the face amount or the death benefit of the policy. But understanding that, then you understand why you should have a significant amount of protection in place on top of meeting your insurance needs. You should make sure you can, in this type of policy, cash value policy with living benefits, have enough to where if something were to happen, you had enough coverage in living benefits. And then the tax implications. Accelerated benefits may be tax-free under certain circumstances, like terminal illness, but you should always consult a tax person to make sure that accessing the funds doesn't put you in a tax situation. But in most cases, it will be taxable, but you still have access to it. So the upside is you still have access to it. And then the other thing is public assistance. Receiving a lump sum payment could sometimes affect the ability for you to get state or federal programs like Medicaid or some type of supplemental security income, SSI. So you just still have to look at that. But of course, like I said, if the face of value is significant enough in your policy, in my eyes, worried about public assistance shouldn't become an issue. And then cost. Some carriers include ABRs at no upfront premium cost, and they'll include it in the policy, while other carriers charge an additional premium amount to add those riders to the policy. And then others take out a fee or charge a fee when it's time to file a claim, and they call it a exercise fee. So you just have to make sure how the policy works and understand how the policy works and see what the trade-offs are in accessing the living benefits. But in my eye, having been in the industry for the time I've been in and understanding and seeing the various things that I've seen, I call, like I said earlier, living benefits the game changer because they are significant in helping you if you have an event that you need to access some type of living benefits. So who should consider living benefits? I think everyone should consider living benefits. It's a safety net for every stage of life. So everyone should consider living benefits. But some of the things to think about is the high deductible health plans. If you need coverage for a sudden catastrophic medical cost and you have a high deductible health plan, then yes, you should definitely look at considering the living benefits. Families with young children and cannot afford to use their retirement savings to cover a parent's illness. So everybody needs to protect their retirement by having living benefits on their life insurance policy. And then those planning for retirement, they should everybody should protect their family's retirement and make sure they have something in place for their retirement. And then, of course, individuals with a family and a health history that may cause them to need some type of protection in the risk of because they have a high risk of heart attack, heart disease, cancer, or catastrophic conditions that run in the family. So once again, who should consider living benefits? Everyone should consider living benefits because they really will put you in a better situation if something were to happen. So in summary, and then looking at the next step, secure your life and your loved one's future with life insurance with living benefits. And living benefits transform life insurance into what its name is. It's actually life insurance. It's a financial tool providing vital funds when you're alive and you may need it the most when something catastrophic happens. So living benefits in summary is it gives the name life insurance exactly what it is because it's something you can use in a life situation. So here's what you need to do: the steps you take. Review your current policy, and if you don't already have living benefits, then definitely it's something to look at changing. If you do have living benefits, look at how your living benefits are paid out and what the amounts are, because every carrier does not pay the same amount in living benefits. And then if you don't have them, ask about ABRs and add them to your policy or get a new policy that has ABRs. And then if you have specific questions, discuss your specific health and financial questions with a licensed professional, and you will be well on your way to experiencing the best that your life insurance policy has to offer with the living benefits. Because once again, living benefits are the game changer. So I want to thank you for allowing us to share this information with our community, and we continue to grow our community and sharing this information on every Tuesday. And I apologize for all the stuff going on. But my time is up for this evening, and I thank you for yours. You guys have a great evening.
That's an outstanding job tonight, Professor. Business Director Eduardo Sprague. Thank you